Now, our Sukumar of Franklin Templeton has also joined in. Sukumar, good morning. How do you explain the kind of flows we've been getting for the last 5 weeks? Because the domestic fundamentals and the macro numbers in India have not been very good at all.
The growth momentum has not been very good. I think individual companies, there's an intrinsic value, and as long as investors see value in some of those stocks, I think there's a reason to buy many of them, and I think that's part of the reason why we are seeing flows.
Okay, we'll come back with more questions. The market opening is coming up in the next 20 seconds now. Maybe some of these autos will react on the way down. Hero MotoCorp did not have a very good pre-opening. Their monthly number wasn't great, so there could be some adjustment there. And of course, the big one to watch would be Voltas today, because Crompton Greaves cracked quite a bit post numbers, and Voltas margins this quarter seem like they might lead the stock down, though the market prepared for it to some extent yesterday. But let's give out the first large cap rates, and then we'll come down to Voltas in just a second. Here come the first Nifty rates this morning. It is opening around 52.33, 6 points lower, now 8 points down at 52.32, recovering a bit to 52.35. The Sensex down 16 points, essentially a flat opening for the market. Nothing in the opening bell, 52.30. Stocks which are not looking great this morning. Hero MotoCorp is down 2%. That's the biggest loser on the index, post sluggish monthly numbers. Tata Motors is down 1% as well, so that's also taken a bit of a knock. In metals, Sterlite is weak, Hindalco is not strong. And in banking, we've got some sluggishness in Bank of Baroda and SBI and Punjab National Bank. So PSU banks have not started the day very strong. In other moves, L&T and Reliance among the large cap basket, they are looking slightly subdued today. And we are seeing a little bit of weakness in JP Associates and Reliance Infra, along with L&T from the infrastructure related basket. Coal India continues to remain weak after yesterday's fall. There is some profit taking in Ambuja Cement, so that's not good. And IDFC is down about a percentage point. It's not like anything is down significantly. Hero MotoCorp is the only stock which is down more than 1%. And the rest are that 0.5% down. Bajaj Auto, some infrastructure names, some public sector banks, as I mentioned, and Reliance, they are all down about 0.5%. Winners, not very many, but it's FMCG to the rescue. ITC and HUL both have done very well. NTPC has recovered a bit, and ICICI Bank continues to move higher, albeit at a very small pace. It's really FMCG which is keeping the Nifty afloat at 52.30 this morning, but flat start to trade, nothing in the large cap universe. What about mid cap, Sonia?
Well, it's flat for the index. The advanced decline ratio is doing nothing as well on expected lines. The stock to watch really is Kale Consultants. It's up 17% post the numbers that it reported. The net profits at 13 crores versus about 3 crores. So that stock is really moving well. In other stocks that are reacting to numbers, Voltas, like we pointed out, on expected lines, it started off in the red, but now it's stabilized, so up almost about 0.7%. So that stock is holding its own. Manappuram General Finance as well as in the green, post its numbers, so that stock is up almost about 2% JP Infra, the Yamuna Expressway kick starts on the 9th of August according to news reports, so 2% up move on JP Infra. And a couple of more stocks, Dishman Pharma is down about 4.5%. Remember, yesterday that stock had a good run post its numbers. That's correcting. NIT Tech is down almost about 10% or so. Adani Power loses some more ground, so down almost about 1% on that accord. And a couple of these real estate names like HDI, etc., are down almost about 0.5%. In other stocks, Century Textiles, after yesterday's 6% move, is up another 1%. And a couple of these names like Alok Industries, Dish TV, Kingfisher Airlines, etc., are up almost about 0.5% or so. It's pretty much result reactions that you're seeing. Deccan Chronicle, SEBI is probing into the promoter's pledge share issue. So Deccan Chronicles is down another 4.5%. For the mid-cap index, it's just flat, but a lot of individual stocks to talk about. Voltas is the one that's reacting positively. It's up 2%.
I think part of it got priced in before the results, maybe because the stock had been slipping for the last couple of days. So maybe it's a case of sell before the news and then buy after it. So maybe some shorts are getting covered up this morning. Also, maybe the market's focusing on the top line number of 20%, which may have come as a surprise because of the unitary cooling products. But I think the internals of the numbers are still very weak to support any significant up move. This seems more technical to me in nature rather than anything because of short covering post the event. The numbers are not great, the internals of those numbers.
There's some news on NIT Tech as well. 2% equity has changed hands, down 8% on that stock. Big volumes. Lots of stocks are moving this way and that.
Yeah, NIT Tech is surprising. Big block and 8% lower. So that's the one we should get to the bottom of this morning. On Mobile Global is another one which is weakened a bit this morning. But the mid-cap index on balance is still okay. So that's not doing too badly. An advanced decline ratio of 330 to 276 is also a bit on the positive side. Back to our chat with our Sukumar of Franklin Templeton. Sukumar, what's your sense of what drives the market from here? Admittedly, as you're saying, it's become stock specific and the market has been in a range. But do you expect it to remain this resilient?
I don't see too much of downside. I think people who were worried about momentum, by and large, I think are out of the market. And I think the people who are in the market, by and large, are looking at the value presented by various stocks. So I don't see a reason why there's going to be any big panic selling unless the policy environment deteriorates significantly compared to where it is now.
Is that a point of disappointment for you that so far we have not seen any great movement from New Delhi yet?
I think the expectations have to be realistic. So we didn't come to where we are, in a day. So it took, the politics to deteriorate substantially for us to come to the current state. And I don't think we are going to become, very good in policy making very soon. I think the expectations have to be realistic. And I think there is some hope that on an incremental basis things can improve, and we are hoping that there'll be some improvement.
What about interest rates? What did you take away from the Reserve Bank? Should the stock market expect interest rate cuts anytime soon?
The Reserve Bank of India is clearly worried about inflation, and there is a reason, there's a very clear basis for that. There is still a lot of inflationary pressure in various food-related articles and in certain other goods and services. So I think tackling inflation has to be a key priority. And so to that extent, in the short term, we shouldn't expect a very significant reduction in the rates.
When do you see the earnings cycle turning around, Sukumar? This quarter too has been up and down, and now analysts are talking about a high single-digit kind of earnings growth for FY13. When do you see some momentum picking up in the earnings stream?
If you look at the corporate sector, I think consolidation is going to be a theme for more than 1 year. I think it's going to be probably 2-3 years. Because of high liquidity in the market and high momentum in the economy, a lot of weaker companies could grow their business in the last 5 or 6 years. And that is clearly changing, and that consolidation is not going to be a 1 year process. It's probably going to be 2, 3 or 4 year process. And during that process, you will see some companies improving their margins and earnings and growth rates, market share meaningfully, and some companies dropping dead. And so you're going to see a mixed bag. But as far as the flows are concerned, we can still see flows into the market because the flows will be directed towards companies which have solid long-term fundamentals. And there'll be very little outflows out of the other companies because the sellers won't find any buyers to sell to. So net flows into the market can still be pretty positive.
Stay on, Sukumar. We need to take a break and come right back with more questions. 15 points down on the Nifty today. It's been a very quiet start to trade, 52.24, but holding 5200. It's not a gap down or anything like that. The Sensex is down 0.25%. Breadth is okay, but some stocks like NIIT Tech, etc. have reacted quite badly. Voltas, though, is holding flat this morning after what seemed like a poor set of numbers. We'll be back with more. Still 16 down on the Nifty and 50 down on the Sensex. It's been a sluggish start to trade, and the breadth is negative. 474 advances to 493 declines. Some stocks have not done very well this morning, and they include the troubled Deccan Chronicle. Dishman Pharma is seeing some profit taking, and Hero MotoCorp from the large cap basket. Kale Consultants from the mid caps, and Nagarjuna Construction have done well. But here's how small caps have opened up. Rima.
Good morning, Udayan. Prime Property Developers has been the big star in the small cap space this entire week. It's rallied about 50% on a week to date. They came out with a very good set of numbers. 3i Infotech is holding up in the green with a gain of about 2%. Earnings will be announced today. Acrisil Limited has seen a gain of, I think, about 12 to 13% when it had opened up for trade. Board meeting on the 14th of this month, where they will be considering a bonus issue. Sangvi Forging has opened up in the green after they've announced a very small order win of about 5 odd crores. On the losing side, Excel Infoway has seen a sharp downtick of about 10 odd % on big volumes as well, and Crew Boss has seen a slightly soft opening of a cut of about 3% again on pretty big volumes. On that note, it's back to you.
Thanks, Rima, for that. That's how small caps have done. Essentially, it's a nothing morning of trade with the market grinding in a very narrow range, digesting the US Fed disappointment and now getting ready for what the ECB has to say later in the day. Back to our Sukumar of Franklin Templeton. Sukumar, how important is it for us for the world to remain on risk-on phase with generous doses of liquidity being pumped in by the US Fed and the ECB at regular intervals?
I think the risk aversion will abate gradually. So once people realize that people have been waiting for some big event to happen, and I think at some point they will get tired of waiting for some big event, and then I think they will move on with their lives and probably start investing into securities which can give reasonably good yield over a period of time. And clearly I think equities are mispriced relative to fixed income in my view, and so I think there's an opportunity. I think there will be more flows into equities in the next year or so.
In the local market, you think the case for equities now from here, risk adjusted, is stronger than fixed income, which is still delivering or promising fairly significant safe returns?
In the case of India, I would say that it's not necessarily the case like the rest of the world. I think equities are still attractive, but not, the story isn't so one-sided like it is in the rest of the world, because there the interest rates are very low, and the imputed risk premium for equities is close to 10% in many countries. I would say the imputed risk premium for Indian equities is probably 5% or so. So I think there is a reasonable reason why people should get into equities. I think they have a much better chance of giving good returns, better returns compared to fixed income. But I think the story is much clearer in some of the developed countries.
If you were to start constructing a portfolio now, which a lot of long-term investors seem to have been doing for the last few weeks, would you take bets on areas where valuations are low but current fundamentals are weak, like public sector banks, infrastructure companies, or would you pay that premium to buy companies which are delivering good cash numbers right now?
We clearly have to bet on companies whose fundamentals are going to improve. The companies whose fundamentals are going to stay where they are going to deteriorate significantly, are unlikely to outperform in the marketplace. So the focus should be on companies which can gain market share, which can improve margins, which will see improved confidence on their sustainability and so on. And clearly that is our focus.
Would you include public sector banks in your portfolio given asset quality issues which seem to have cropped up?
We have been very underweight public sector banks. We almost have no exposure in that space because we have a lot of concerns.
What about the construction infrastructure space? That also has been a very low valuation space because of all the concerns of the last many quarters.
Yeah, apart from that, there's also a question of, what returns those companies can produce in the long term.
Oops, seem to have snapped that link with Sukumar, just as he was telling us whether he would buy construction companies.